Amagi Metals, where financial freedom is yours.
Hello, Amagi Metals fans and followers. This is Megan Duffield here on the Amagi Metals YouTube channel, speaking with David Morgan today. David Morgan is known as the Silver Guru. He's been seen on major news networks like Fox Business and CNBC. He's also authored a book called Getting the Skinny on Silver Investing, which I've read and own and highly recommend to everyone who's interested in precious metals investing. Thank you very much for joining us today, David.
Megan, my pleasure. Thank you.
So today me and David are going to jump right in because I just noticed the silver price just dropped below $19. It looks like there's been a bit of a downward trend with silver. A lot of speculators had predicted it, but I'd love to hear your thoughts on it, David.
Well, I've been in this market for 40 years or more, not constantly. I've followed the silver market daily, almost daily. I mean, when traveling, etc. I miss some days that I don't see the exact price, but overall, I've followed the silver market as closely as probably anybody out there. And what I've learned, not about silver, but about markets in general, is that, you don't want to tell the market what to do. You have to be a very careful market interpreter. And the market knows more than anybody, regardless of manipulation or not. The market's the market. I mean, we can argue about how the price got to a certain level, but we can't argue about what the price is. So having said that, I have already gone on record many times on shows like yours, Megan, that I saw the bottom in the silver market already. And that was 1817 on the 28th of June, 2013. It was a key reversal day. It was a spike low, which is typical of silver to do a spike low. In fact, I've written an article about that that's in Futures Magazine several years ago. But it closed at about 2007, so it made about a $2 spread during the day. And that is very indicative of a market that has been exhausted. And from that time until now, as we're doing your show here on the 1st of May, that's the low, and will it hold or not is the real question. So let me, with that background, say that I can't change my forecast. I've already said the bottom's in. Could I be wrong? The answer is yes. I'm certainly big enough to admit that I could be wrong. And here's my take now. If we close under the $19 level, now close, so the market hasn't closed as we're doing the interview, it may close under 19, it may not, we don't know yet. But if we were to close under 19 three times, it doesn't have to be three times in a row, but three times. If that were to occur, then I would be, the market would be signaling strongly that we're probably going to test that 1817.
And I'm sure a lot of our listeners would like to know at different things to point at whenever the price is fluctuating. Recently, I did an interview with Ben Swan, and he mentioned something that I think a lot of people forget to think about in the U.S. is looking at what other countries are doing within their consumption of precious metals.
We get this idea, and I think it's just part of the culture that everything is American-centric if we're, around the U.S. And, of course, the United States represents, 5% of the world's population, so 95% are outside the U.S. citizenship bandwidth. And we use 25% of the world's resources. So not everyone can have an American lifestyle. If we do, we need 4 more planets to have the same lifestyle that most Americans enjoy. So we need to look at what the uses are of precious metals or the appetite for it, because gold is not industrial metal per se, where silver is both monetary and an industrial metal. So the silver use continues to expand. I mean, if you look at the silver surveys that are done by GFMS and CPM Group, they'll argue that there are years that industrial demand falls off somewhat, and I wouldn't disagree with that. But falling off somewhat is still within the context of what very few people think about. And here's what I think they might consider. If you go back about a decade, the amount of silver used in industry is 35% of the total silver market. Today, it's 50% of the total silver market. And this is important, the production of silver over the last decades has increased substantially because there's been a huge commodity boom, largely driven by China. We could argue that that's over or it's in a lull right now. I'd certainly say it's in a lull right now. I think it will continue. But the idea is that the market's gone from 35% of the total market used in industry to 50%, while the amount of silver mined on an annual basis has increased. So to say that, last year the industrial demand fell off and all this, true. I won't argue that. I mean, it's hard to measure, but we could say that. But if you look at it from just a 10-year perspective, obviously the industrial demand for silver is growing and growing and growing. Having said that, the solar industry has been a big driver in the last decade, and it was pretty much on track to the forecast that I wrote in the for the members only, part of the website that you pay for. And that was 140 million ounces a year, 130 million ounces a year on an annual basis starting at about 2015. And we were on track for that amount up until last year, and then it fell, and it has been leveled off. However, Japan is making noises, and so is India, about increasing their solar, whereas Germany has basically stopped altogether for all practical purposes. So it's sort of an ebb and flow here on the solar situation, whether or not it's going to really increase or not. We're at about 70 million ounces a year solar use, about half of what was forecast going back to 2000, so 4 years ago. It's always hard to get, to be accurate on these long-term forecasts, but, you can make them and hedge your bets. In other words, state that this is the most optimistic case or whatever. So the demand for silver industrially continues. And economically, it's harder to get a handle on from foreign investment. But from U.S., there's a couple ways to look at it. One is to talk to the major dealers, which I do. And secondly, look at Silver Eagle sale, which are in the record books. So the physical demand for silver as an investment continues to be rather robust. Not as aggressive as it was when it was above $30 an ounce, but still, nonetheless, many silver stackers continue to buy the metal. And then again, the industrial side continues to be, reasonably strong. So on the gold side, it's, I think, even tighter, which always felt that the silver market would probably be the one that would show the most tightness between the two metals. But it looks like now, and I've said this for well over a year now, gold seems to be the tight. You've got China that continually is buying the physical market. You've got a great deal of gold that's flowing into Switzerland to be re-refined into what we call the China grade, which is 4/9 fine in kilobars. And I think there's two reasons for that. One is uniformity, and second is just to make sure that all of the gold that they're getting is pure. But nonetheless, if you buy gold and it's demanded to be refined again the second time to a certain standard, and you know what you've got. So the flow into China just continues unabated. And, some people make light of it, some don't. I don't. At that demand rate, if it continues, at some point you're going to reach the tipping point, which means that the demand cannot be met by the amount of gold that's remaining to be sold. It doesn't mean that there isn't any more gold or even that there's a shortage. What it means is that the market is so tightly held. It's like any market. It's like a stock market or a commodity market or anything. That all the holders say, I will not take $1,300 for my gold, period, no matter what. I'm not going to do it. So that's tightly held and it's not offered to the market. And there's a demand for, 5 tons of gold at 13, and no transaction takes place. So then it has to be bid higher. So 13.10 or 13.15 or 14 or whatever. And that day's coming. And unfortunately, none of us know exactly when and how, et cetera. But that is the point.
So we just covered finite resources, but let's talk about these infinite ones that the Federal Reserve produces. And recently the Fed began with their new chairman tapering the quantitative easing process. And you can look all over the internet right now, and articles are saying how they are failing at their two jobs of controlling inflation and maximizing employment. But how do you think the Fed tapering is going to have an effect on silver in the short term, if any?
Well, great question. First of all, I think that the idea that the Fed has a lot of control is valid to a certain level, but there is a possibility, a very strong one in my view, that they can lose control. And they are in the process of losing control. They are in a very, very tough situation. As the expression goes, they're boxing a corner, or they're between the the devil in the deep blue sea. They're in a situation where they don't know what they can do. So on the one hand, they need to show some semblance of restraint to the capital markets in general, which means, in layman's terms, that they have to pretend as if the dollar has value and that they are willing to cut back on their bond purchases to tell the market in general, which basically means Japan and China and everyone else that has bought U.S. debt in the past, that we are going to take the quantity of money and show some restraint there. Therefore, your long-term bonds, your mid-term bonds, your T-bills, and your T-notes are going to maintain value because the quantity of money is being curtailed. Because as you said, and it's very accurate, Megan, they can print to infinity, and anything that has a huge amount, a huge supply, becomes worthless over time. So the idea is more political than reality. It's to show the trading partners and the world at large that the reserve currency, the one that everyone depends on, the one that everyone's tied to, like it or not, is showing some fiscal restraint. They're going to taper, and therefore the value of these things in the future will still, be there. So that's step number one. Step number two is, well, it's not working, so what do they have to do? And of course, in a debt-based monetary system, the debt always has to expand. With it not expanding, you cannot make the interest payments on the debt. In other words, the servicing of the debt. So it's like on a micro level, it's a credit card payment, and the person that has a credit card can just barely afford the interest payment on his credit card every month. And so what happens is interest rates go higher, then even though the debt load is the same, the payment goes up because the the interest rate has changed. And that's what's facing the United States, facing the globe, really, because it is a global problem. And so on one hand, they want to pretend they're tough and they're going to restrict the quantity of money and therefore forecast that the bonds will have value in the future, whereas by pretending that, they're also putting themselves deeper in the hole because the market will come back and say, well, interest rates are going to have to, will increase because I'm not so sure about this debt. So they're acting as if, these things have value. The market's reacting as if, okay, we trust you for a while, but at some point they're going to say, no, I don't care what you guys say. Look at what you're doing, and you're not really tapering in a manner that's really going to result in anything worthwhile, anything that's going to assure me, China, assure me, Japan, assure me, hedge fund, assure me, banks, that you've got a handle on this thing. And so the market at some point will demand higher interest.
Right.
And when that happens, bond values go down and the mess begins. And the mess has already started. I mean, the mess started a long time ago. You could argue it started when the Fed was founded. But what I mean by the mess starting, it'll accelerate, it'll become more pervasive, it'll become probably even in the mainstream to some extent, certainly in the alternative press to a great degree, that the tipping point has been reached and people want out of the dollar. And once the rush out of the dollar starts, you'll see inflation manifest in a large degree very rapidly.
You're making this too easy on me because my next question was going to go into a major inflation situation. I love talking to people my age about retirement. And full disclosure, I'm 27 years old. I would say that makes me a recent college graduate of some sort. And people I run into, some of them actually seem to think they're going to find a job with a 401k pension retirement plan that they're going to live off of once they turn 55 years old or something like that. And I'm more under the impression that people need to start getting creative with their retirement, and I'm sure you can agree. What are some recommendations you would have for recent graduates or anyone in between that 25 to 45-year-old age range that isn't going to be benefiting off of these, age-old retirement plans that used to exist?
Excellent question. Probably one of the most important that I can have to be of service to others, especially people roughly in your age bracket, Megan. First of all, the idea that relying on someone else to take care of you is, I think, philosophically something that shows adolescence behavior rather than adult attitude. That's not to say that community isn't important. Absolutely, community is important. So you don't want to be, totally self-reliant where, you individually make every decision and don't rely on anyone else. And, if we did that, we wouldn't have the great situation we have. As messed up as it is currently, we got to a pretty high level globally for a very specific reason, and that's division of labor. And division of labor means that I get to do whatever I do best, and you get to do whatever you do best. And because we specialize, and we don't have to do everything, we don't have to grow our own food or make our own transportation and that, we all get to prosper better because we get to trade with each other, and that's facilitated by the use of money. So let me be clear on that point. Having said that, relying on your financial future in today's world, this could change in the future, but I certainly don't see this happening for some time. You have to be very savvy on just the basic common sense stuff. So let's just go back to basic common sense money. You can argue with me all you want, but history shows, not David Morgan, but history shows that money has been voted by the people at large, not by U.S. citizens, but by people globally, have always determined over time that gold and silver are money. A piece of paper with a picture on it in any land is just a facsimile or a derivative of something that used to hold value, such as gold and silver. So money is not a digit in a computer chip or a computer in a bank or any of that stuff. What it really is it's physical gold and silver. Again, that's history is showing that, not me. So if you go back to an honest money system, you know what a dollar's value is because it really doesn't change. Now, this would be very difficult for people in your age group to get their heads around because they see the price of silver change. We started this conversation with silver and where it's going to go. That's the price of silver. That's not the value of silver. When you don't have a dishonest money system, an ounce of silver, an ounce of gold basically retains its value or its purchasing power, will be a better way to think of it for this discussion, over time. A loaf of bread basically costs the same for 100 years when we're on a gold standard. It doesn't mean that everything costs the same over 100 years, but that's the general idea. Let me be even clearer. In a true honest money standard, the productive capacity of the human ingenuity, you, me, and everyone else out there, the productive capacity increases, it gets better. So really you have a slight deflation over time. So my point is this. If you were able to save $1 when you're 27, and when you became 37, 47, 57, or 67, that dollar's value or purchasing power would be probably greater than it was at 27. Why? Because one, the stability of the currency, and two, the productive capacity of the society at large gets better and better. We all know, like a laptop used to cost a lot more than one does now, and it has greater memory now, et cetera. That's productive capacity. That means that we continue to improve. We continue to find ways to make things more efficient. We continue to make things at a lower cost. And if the value of the money is constant, in other words, there's no paper derivatives, there's only honest money in the system, you can plan your financial future. You don't need a financial planner. You know if your lifestyle takes 1,000 silver dollars a year, that if you saved 1,000 silver dollars, that would maintain 1 year's worth of your lifestyle in the future, or better, as I just explained. So if you had a goal, you're 27 and you want to retire at, say, 67, or do a sabbatical, serve humanity, whatever, and you knew ahead of time what your spending rate was, you could plan very accurately without any financial planner, without any help whatsoever, what your financial future should look like. So having said all that, I think that, one, everyone should probably have precious metals in their savings plan. Even if they do buy into the 401k or KEO or IRA or whatever. But, the government really has been showing people for years, even as old as I am, that, you really have to look at your own retirement. I mean, the 401k stuff and the IRA things that started when I was about your age. And that to me was a very clear signal that they were broadcasting that, these pension plans from these large corporations are going to be hindered in the future. So you got to look after yourself. So I want to go one more step, Megan, if you let me drone on here a little longer. But in today's world, where we don't have honest money, but you're a silver stacker, there is a way to supplement your income or actually use it totally, and that is to use a plan of living off your principal, which, of course, we all know you're not supposed to live off your principal. You're supposed to save, quote-unquote, money and live off the interest only. So if you had $1 million and interest rates are 10%, of course they're at zero basically. But if they're at 10%, that'd be $100,000 a year. You never touch your principal. You spend $100,000 a year, and life goes on merrily until the day you die. Well, that's the old world. That was when I was, much younger and interest rates were much higher. In today's world, if you had a amount of silver, or gold or both, you could sell 10% of what you had and use that, cash that in for fiat, and use that to supplement your income or use it for living expenses, et cetera. Then the next year, what you do is you sell 10% of the remaining amount. And then the third year, you sell 10% of the remaining amount. You could do it quarterly. You could do it semi-annually. You could do it once a year. You could even do it monthly. And if I'm correct, the long-term trend of the precious metals continues to go up in price and value, really, over time, then you never run out in theory because you're always selling 10% of the remainder, which will get, we'll get to some point where you have a very low stash, but nonetheless you'll still have some remaining. And if the price continues up in the longer term, and I realize that we've been flat or lower for 3 years, let me be very clear on that. But that would be something that you could use as a strategy. So it's something that you probably never heard before. It's obviously common sense. But I really think that if you are in your age bracket or any age bracket, even if you're retired, you should have some precious metals. I want to go on one more step there. One of my older clients, he's somewhere past 70, got a hold of me recently and told me, what his favorite video on the Silver Guru channel on YouTube is. And, of course, I never know because it's subjective. Some people like this one or that one or the other one. And he had one that was one of my pet peeves about most of these coin dealers, and this is not you, Megan, so I'm not picking on your coin dealer, but some of us have got this kind of blasé attitude that they say, well, everyone should own a little. And I made a video about everyone and a little and what those two things meant. You can look it up on my YouTube channel. But basically, it's impossible for everyone to own a little silver or a little gold. It's impossible because the way you define everyone and the way you define a little determines, in the case of silver only, if you just use 5% of the population, and that's 350 million people, the U.S. only, and they owned a little being 2 ounces of silver, which I think, $40 is not going to change anyone's life. $40 is a pretty small amount relative to most people's incomes or what the national average is, et cetera. It's a very small amount. That amount is the amount mined on an annual basis. So in other words, if everyone in the U.S. bought a little, 95% of the world wouldn't be able to purchase any silver. So you see my point. Everyone can't own a little. They call it precious for a reason. It is precious.
Right. I totally agree with you. I think that is quite a picture to paint as well to our listeners on how precious metals actually are. So another thing our listeners would be really interested in hearing your thoughts on is cryptocurrencies. At Amagi Metals, we accept Bitcoin, Litecoin, and Dogecoin for silver and gold, which are a few of the different cryptocurrencies that exist. I've read your thoughts on cryptocurrency. I know how you feel about it. And those of you who are listening, David and I, last time we saw each other, it was at the Silver Summit in Spokane, Washington, which is a mining and metals-focused conference. And what I noticed, an observation I made during that weekend was, cryptocurrencies are still a very foreign subject matter for people in the precious metals industry. However, I think coin dealers and things like that are starting to become a bit more familiar with it and starting to offer it as a form of payment. But how do you see it as an investment, and do you see it merging with gold and silver in the long run as a way to hedge against inflation?
Obviously, the world is striving to find an alternative to these government top-down control banker mechanisms that are basically a control function. I mean, money is power, and the power is very concentrated, and basically there's a great deal of control over individuals' lives based upon the monetary system and how it's controlled. So there needs to be an alternative, and the cryptocurrencies are a very clear effort for the sign of an effort for that to take place. So I'm not against them. My main concern about them is that there have been some issues with some of them as far as security, one. But, the general idea to have a alternative, like, preface the show or didn't preface it when we started talking early about, honest money, and the market determined that, and that's what has worked for, a very, very long time. And then, of course, governments come in and say, we've got a better way, and they take you off a gold standard, and all hell breaks loose eventually, and that's where we're at right now. Coming back to cryptocurrencies, I think that they have a place. What I like is one that this friend of mine that I met at the Silver Summit a few years ago, when I gave a speech about what I saw in the future, which was a gold or silver or precious metals, I should say, backed debit card. And this gentleman took that idea and ran with it, and he has implemented that. And what I like about it is you could be a silver or gold stacker or both, have a debit card issued against that, and also have a cash side. So you can fill your account with, $1,000 in fiat and $1,000 in silver. And when you use the debit card, unless the silver base price is above where you started, you're debited on the cash side. And so it's a good way to save. And in the event of a bank run or a bank failure, the precious metal side, silver, gold, platinum, palladium, whatever it is still intact because it's held basically outside the banking system. So I think that's another step. And I think the cryptocurrency, I think there'll be, and I think there already are, Megan, you're more up on this than I am. I think there's already are going to be, cryptocurrencies, there will be precious metals backed. It's evolving. I think that's good. I think the people should take the money power back in their own hands and get it away from the banking elite because it's caused all kinds of problems we all, anyone listening to this channel would know. So I'd say it's evolving, and my opinion of it or my take on it is evolving as well. Not against it. Some of them are just basically debit and credit entry like we have now with no real substance behind it. People argue, well, it's an algorithm and that doesn't work and all that. I won't argue against that. My point is they're basically still fiat in most circumstances. I think there'll be a blending. The market will come up with a solution. It always does. The market's hard at work because, again, people see that the system as it stands is very corrupt and very vulnerable. We're basically very close to what I think is a tipping point. Really, the tipping point happened in 2008, in my view, and we haven't gotten substantially better since then. We've just been putting Band-Aid after Band-Aid after Band-Aid on top of a huge mess, and sooner or later, that Band-Aid needs a tourniquet, and even with the tourniquet and another one, it's not going to hold back the rupture in the system that's already taken place.
Going along with that, one of the remarks I read within your article on your 2 bits on Bitcoin, which everyone, if you're looking for the article, you can also find it at silver-investor.com. Stu Thompson's remarks I thought were interesting, that Bitcoin is a tool to get more gold, which, we encourage that at Amagi Metals. However, we're also huge proponents of cryptocurrencies and see a bright future for them. But how do you feel about Stu Thompson said about that?
I don't really look at it as an investment. It hasn't settled. I think there's too many variables at this point in time. Although as we move forward, I think it will become more and more clear. The market will determine, how stable it is and how many people are using it. And as more and more people adapt to it, and perhaps it changes subtly over time, there will come a point where it could be very substantial. I know it already is, but I'm saying it'll become even more stable, more substantial than it is today. So, yes, can it be used to buy more gold? Certainly.
Right, and we're seeing the trend of people cashing out Bitcoins, and especially whenever there were some shaky events going on with Mt. Gox and people who weren't really familiar with the infrastructure that were just going in on it because it seemed new and exciting. People like that saw silver and gold as a great way to get out and still have made a great decision. Yeah, I think there is a bright future for cryptocurrencies. Amagi Metals is most definitely waving the flag. However, we also strongly believe in precious metals and not everyone owning a little bit, because as we talked about, that's not possible. David, it's so great to always talk to you about these topics. So knowledgeable. Everyone listening, I highly recommend once again checking out David's website, which is silver-investor.com. He's making appearances all over the country on a regular basis, speaking on this subject matter. And David, thanks again so much for your time.
Megan, my pleasure. Thank you.